Today I want to break down why three companies, Lululemon, GlobalFoundries, and DigitalOcean, are getting attention from investors heading into 2026 and whether they actually deserve a serious look right now. I'm going to take you through the bull case for each, the risks, and where they realistically fit if you're building a long-term portfolio. Let's start with Lululemon, because this one might surprise you. The stock has been absolutely hammered this year. It's down by roughly half. And for a brand that used to trade at very premium valuations, that kind of drop drastically changes the math. Today, Lululemon trades at earnings multiples that are not only lower than its own historical norms, but also lower than a lot of its apparel peers. So a big part of the investment thesis right now is simple. If Lululemon can stabilize or execute even a modest turnaround, the stock doesn't need heroics to re-rate upward. It just needs to return to its old normal. What gives investors hope is that while the U.S. business is struggling, the international side of the company is still strong. International revenue jumped over 20% year over year, and China alone grew by about 25%. They're also pushing into new regions with a franchise model, which could be a meaningful long-term lever. So the real question is whether the brand still carries enough weight globally to keep margins healthy once the American consumer stabilizes. Now before I continue, if you're finding this breakdown helpful, make sure you hit the like button so more people can discover videos just like this. And if you want deeper dives on individual companies or portfolio building strategies, subscribe so you don't miss the next one. Back to the analysis. Let's move to GlobalFoundries. This one is very different from Lululemon, but in a good way. GFS sits in the semiconductor foundry space, meaning it manufactures chips for other companies. And if you look at the numbers, it's actually undervalued relative to many of its peers. Analysts generally place it in the buy category, and its financial health metrics show strong cash flow potential and room for margin expansion. The broader macro tailwinds in semiconductors are undeniable. AI infrastructure, cloud data centers, automotive electronics, IoT, 5G, and edge computing all require chips, and a lot more of them in the coming years. On top of that, the global push towards supply chain diversification and onshoring means companies like GlobalFoundries become strategically important. This is one of those businesses where steady, multi-year demand is already baked into the world's direction. Going into 2026, GFS looks like a grounded, long-term hold with less downside volatility than high-growth software or consumer discretionary companies. DigitalOcean, though, is a different story. The public market coverage around it has been much lighter, and the bullish narratives aren't nearly as clear as they are for Lululemon or GlobalFoundries. DigitalOcean serves small developers and startups with simple cloud hosting, and that niche can be valuable, but the competitive pressure is intense. Without a strong and widely recognized moat, and without clear margin or growth catalysts, it becomes more of a speculative play. That doesn't mean there is an upside. It just means the upside is far less predictable. If you own it, it makes sense as a smaller satellite position, not a core portfolio driver. So stepping back, here's the big picture. GlobalFoundries fits the profile of a reliable long-term core holding. Lululemon fits the profile of a recovery play with genuine upside if management can execute and if the global consumer environment improves. And DigitalOcean fits the profile of a speculative pick, something that could reward early believers, but only if the company proves its edge in a very competitive environment. Going into 2026, all three have different roles, different risk levels, and different potential payoffs. Strong portfolios aren't built on hype, but on understanding where each company belongs and why. If you want more breakdowns like this, stocks, sectors, and full portfolio building guides, make sure you subscribe and turn on notifications. I've got more deep dives coming, and you won't want to miss what's next.